Many investors equate volatility with risk, but they're not really the same. Volatility measures price fluctuations in the market. Risk, on the other hand, is the possibility of an investment performing worse than expected. Well, the market has seen some wild volatility the last few weeks. And today, this video is a quick commentary on why that volatility is a friend to quality investors. Welcome to the Quality Investor. Today's video will be a quick one. I've had a busy week at my day job and I'm traveling this weekend. But oh boy, I've still been eyeing the markets like a hawk. I want to comment on the volatility and discuss why there isn't much risk if you're buying quality businesses. This has honestly been fun to watch. Right now, it feels like we are in a violent storm, waves lifting us up only to come cascading back down. The price swings have been absolutely jaw-dropping, not just day to day, but seemingly every hour. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. No doubt this volatility has many investors queasy about their stocks. Many investors use volatility as a measure of risk. Essentially, the more a price fluctuates for a particular stock, the riskier it is. But that is not quite accurate. Risk is a probability. It is a question. Will this business perform worse than I believe in 5 years' time or 10 years' time? And when I say worse, I mean lose a sizable amount of my investment. And the whole point of building a portfolio of high quality businesses is to remove that risk. Buying high quality businesses and holding them for the long term is far less risky than trading, buying the next hot stock, and even just parking money in a savings account. Trading goes without saying. The next hottest thing is just speculation. And a savings account, well, that will lose you money to inflation. A risky business, however, is one where the fundamentals are trending in the wrong direction. They're losing share to competition. The market they operate in has unpredictable or murky growth prospects, and so on. Microsoft is the opposite of risky. It is one of the best managed businesses in the world. It has positioned itself at the forefront of cloud and AI technology. The future is bright and its earnings back that up. Holding Microsoft might be volatile, at least in 2025, but risky? I don't think so. The volatility we are seeing is all caused by the dreaded T word, tariffs. Trump's administration is slapping blanket tariffs on all of the United States trading partners. The markets have been reacting with extreme volatility, and much of that is due to how Trump is enacting them. It seems all countries one day, then he pauses them, then he puts certain countries back on tariffs. Essentially, nobody knows what to expect next. Not US allies, not US enemies, and least of all, the markets. And if there is one thing markets despise more than anything else, it is uncertainty. So the way the market is reacting is completely in line with an uncertain monetary policy towards US trading partners. This volatility has two characteristics right now. The first is that it is your friend. There are sure to be more deep red days in the market. That is our opportunity to scoop up some great businesses at steep discounts. The fundamentals of Google, Microsoft, and Intuit are not suddenly 15 to 20% worse than 2 months ago. Google, for example, derives 70+% of its revenue from search. That is not subject to tariffs. The market is not reacting in any rational way right now. The second characteristic is that this is all short term. I don't know when the bottom will be. I don't know what Trump's endgame is. I don't know what all the renegotiated trade deals will look like. But I do know that in 5 years, when you zoom out, this will be a blip, barring some cataclysmic event, of course. But this is all short term. And in the short term, we are getting a rare opportunity to buy high quality businesses at a steep discount. So this is a short video today, but embrace this volatility. Seize this opportunity to buy more high quality businesses. For example, I was able to buy Fortinet and MSCI, among others, for the first time in over a year, thanks to this volatility, and eliminate your risk by only purchasing shares in high quality businesses. And that is what this channel is all about. Buying high quality businesses at reasonable prices. And right now, the market is gifting us exactly that. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.